Welcome, ladies and gentlemen, to Commodity TV in a new edition of our online interview series. We want to get an update from Premier American Uranium. And Colin Healey, the CEO, is here with us today. Colin, good morning to Canada. How are you?
Thank you. I'm doing fine. How are you?
Perfect. Oh, fine. Thank you. Despite it's too warm here. But anyhow, it is summer. We like that, right? We were complaining about too much rain. So now this is also fine. Yeah. Last time we spoke, a lot happened. Especially, I would say, congratulations to that, I would call it merger with nuclear fuels. So please give us some, transaction rationales. Why have you done that? What was the reason for it?
Well, thanks a lot. First of all, we're really excited to be doing the transaction. I think that the rationale is pretty clear. Nuclear Fuels has the KC project up in the Powder River Basin of Wyoming. We've got the Cyclone project in the Great Divide Basin in Wyoming. So this acquisition more than doubles our footprint in Wyoming. Their project is proximal to multiple licensed and operating processing facilities. Our project down in the Great Divide is proximal to two licensed facilities, one operating. So I think these two assets are very, very strategic in terms of their position, but also in terms of their resource potential. I mean, this the KC project inside of Nuclear Fuels has a resource exploration target of on the high side 30 million pounds, on the low side 11, um, and this kind of more than it increases on the low side the exploration potential for PUR in Wyoming by over 150% and over and 250% on the high side. So a whole bunch of reasons to really bring this asset and this team into PUR.
Mhm. Okay, super. So that makes sense. So that two neighboring projects are now, coming together, I would call it. That makes probably on the exploration side things a lot more easy, will save costs, I could imagine. And I saw that Nuclear Fuels was super active at drilling over 200,000 feet, right?
On a combined basis, the two companies in 2024 did over 200,000 feet, much more than all the other exploration only companies in Wyoming combined. We're on track this year. We'll be drilling at the Cyclone project starting literally in the next kind of 5 to 10 days. And they're already drilling at the KC project in Wyoming on the nuclear fuel side. So much more robust news flow profile, drilling two projects in Wyoming. At the same time, we're preparing our PEA for our New Mexico project. So I think it's going to be one of the busiest, most news heavy exploration plays in the U.S. and certainly in some very attractive districts.
Okay, super. And this is all ISR, right? Cyclone and Casey.
Yeah, all the Wyoming projects that we're exploring it or that we plan to explore are ISR.
Mhm, okay. Now, what would be then, let's say, more future planning on that? Let's say you will hit a lot of good holes. You see, wow, that is really moving. We have a beautiful resource. Would that be then the next one here, a new resource statement? How could you bring that, let's say, into production finally? Because I think with ISR is not so tricky as conventional mining, first thing. Second thing, President Trump is, I think, supporting heavily uranium production in the US. And so maybe you guys could also benefit of that, right?
Yeah, I think so. I mean, the United States has made some really, really strong posturing in favor of nuclear power, and uranium specifically. So it's an incredible environment to be out there exploring. I think as far as strategy goes, it's going to be several, 2 to 3 drill programs before we're looking at delineating a resource. But that is the plan, and that's the reason it's important to be proximal to existing operations that are in the process of ramping up. I think that 2 to 3 years down the road, when we've got resources, or when we hope to have resources in place, that these two assets in two different jurisdictions are going to look very, very attractive to existing producers looking to backfill the capacity of their ISR processing facilities. And you're right. I think from on the ISR side of things, the CapEx hurdle to production is lower. There's a little bit less friction. What I like about Wyoming specifically is that more than one plant has been built in the last 15 years, and is, in the process of ramping up or is already ramped up and producing. And, this just speaks to the ability to get things permitted and constructed in Wyoming, which is, one of the most important de-risking factors in developing a mining project in any commodity.
Absolutely. And I think with the merger with nuclear fuels came also some nice amount of cash money, right? So I could imagine that helps a lot. Will that cash bring you through 2025 and maybe also 2026?
Well, it certainly does carry us through 2025. The question becomes, what kind of results do we get from two large drill programs this
Mm.
summer? And how do we want to allocate that cash in 2026? How aggressive do we want to be? And where the market is at? So um, it does come with quite a bit of cash, the resulting entity. The current balance sheets or the last reported balance sheets at 14 million, slightly less. They're already drilling there. But independent of where we actually are, it's a very, very strong cash position, gives us a lot of flexibility to go out and explore these projects. But, you know, PUR was built on this acquire, explore, develop model. So we expect to be out um, working on other things in our pipeline to continue to build out this portfolio of assets in strategic jurisdictions like Wyoming. So the how we spend money is really going to be driven by two things. The success that we have in the field and the size of the portfolio if we grow it with further acquisition. And we're always trying to do. I think this acquisition is just perfect from multiple perspectives. The jurisdiction with that nuclear fuels is in, the cash that they have, the team that they bring, and that's the kind of acquisition that really compels us to work hard on.
Mhm. Okay, super. You touched already on New Mexico Ceboleta project. That was also, yeah, coming to you through a merger with American Future Fuels. So, what is going on there for this year? Because it looks like it is transformative because you have planned a new resource update and also a PEA. So, when can we expect that maybe?
Yeah, I mean, first of all, we're really proud of what we've been able to do since acquiring that project. We closed the acquisition of American Future Fuel um, back in June of 2024. Uh, at the same time, we were able to get the first ever NI 43-101 compliant resource on that on the main underlying asset, Sabieta, 23.5 million pounds, 80% of that in the indicated category. So a lot of success right out of the gate getting that resource, moving us up the kind of time development curve, so to speak, uh, and now being close to publishing preliminary economics in about 12 months, a little bit more. I think is really speaks to some strong execution within the team at PUR. When can we expect it? We said early summer. So we're still looking at early midsummer, depending on your definition. We just entered summer, I guess, a week ago, but we're in the later stages of evaluating that draft and making adjustments. So I would say in the next kind of 4 to 6 weeks, we're probably going to be in a position to publish that, and we'll be excited to deliver it because I do think it's transformative. It really gives the market a template for the economic potential of that project and will justify some decisions that we make. We've got drill permits there that are available to go out and do some work on, but I wanted to get the economics in place and present it to the market first so we could justify or explain why we think it's worth putting some more money into the drill work and potentially expanding the resource, collecting the metallurgical data that we need for design of the for refinement of the process. So a whole bunch of exciting kind of news, pretty transformative, a PEA for sure, coming out of New Mexico this summer as well.
Okay, super. Maybe some words on Colorado because that looks also like a lot of good projects you guys have there.
Yeah, and we haven't we've been very, very busy in Wyoming where we drilled last year at two of the targets on Cyclone. And like I said, working on the resource at Sebieta and then starting to work to design that PEA and scope that mine. So Colorado has not seen a lot of attention for us. We continue to maintain those assets for strategic purposes at some point. We'll either work them or potentially use them in some of our M&A activity to uh, horse trade for different positioning or just to make the portfolio more efficient. But there's some very attractive assets there that at some point we'll dedicate some resources to, but they're not going to be a strategic focus for us in from an exploration perspective in 2025, and potentially not in 2026, but that's going to be market driven heavily.
Yeah. Okay, super. Would you say that you stay rather an explorer than maybe you want to develop a one of your projects into production?
I would say that no matter what your plan is, when you're exploring and developing your uranium assets. You want to be advancing them as close to production as possible. And if that means eventually transitioning into production, you're going to do it. And the reason is because that's how you make them position them as the most valuable. It's very, very hard to replace assets that have visibility on cash flow. So if we could move something into production, we would definitely want to do it. That changes how you get valued. I mean, you can look at the valuations of the even the companies that are transitioning to production right now that may be having some stumbling or some friction in the initial stages, they still get very premium valuations because they have that visibility on cash flow. So I think that as we're going to develop and advance the portfolio as though we're moving everything into production with the intent of going into production. And if there's a transaction that happens on the way, then that's so be it. But the idea here is to develop assets that have a viable shot at production and then move them into production.
Okay, super. So if I get you right, for this year also, Wyoming and New Mexico is really the focus of the company, right?
For sure. That'll be the majority of the exploration spending.
Okay, super. Then let's have a look onto the markets because you said depending on market condition. So, as you are a former analyst, what is your view by now on the uranium, yeah, market? I would call it. How do you see the market today? Because I still have the feeling U3O8 price is way too low. We are in a heavy deficit, and to me, that makes all no sense.
Yeah, and I would totally agree. I continue to see it, and I've seen it as undersupplied for a long time, and I've seen the inventory start to get segregated a bit so that it won't be as accessible. So with every pound that gets tucked away into a physical inventory fund or elsewhere, it becomes every incremental pound that gets bought in the market becomes more impactful to the price. So, you know, somewhere between now and 2026, I think we're going to see a real pinch on uranium price. And, I think PUR is extremely well positioned for that. But I don't think that it's sustainable, the current supply demand deficit, the supply deficit to demand, and especially not in the context of the accelerated plans to develop and build additional reactors. I mean, the uranium market simply can't supply what's in the pipeline for future construction. So I think it's an extremely compelling place to be as an investor. And I think it's always been difficult to judge how the nuances of the uranium fuel cycle are going to play out time wise. There's some buffers built into that fuel cycle that allow for or make it difficult for us to assess exactly when the pinch point is going to be in place, but we know that it's going to be rapid when it does because it's one thing we know is supply doesn't come online quickly or easily. So given that, and without a uranium price right now that incentivizes the higher decile of the cost curve, we know that supply is not going to be like a tap to turn on when the buying comes. And I mean, it's an incredible setup, and I always say that this time is different than any other time that I ever saw in the market because in the past we've had supply shortfalls, we've had price go up, we've had supply responses, but we never had the demand side behaving the way that it is, like truly a renaissance in nuclear energy, with incentives, like it's easy to quote 31 countries tripling nuclear capacity by 2050. But if any of that sort of actually happens in the world in kind of even 30-40% of that. The market is already undersupplied. It's going to be a huge catalyst for uranium price. So I'm looking forward to participating in it.
Absolutely. Have you heard from the political administration, let's say also from Wyoming, New Mexico, Colorado, etc., that they want to help also the industry, not only on federal basis? Is there anything going on?
At the state level, we've got good relationships in the state. In Wyoming, Wyoming being a agreement state for nuclear processing facilities, you mostly deal at the state level, and they have a great reputation of being a one of the strongest jurisdictions in the US for uranium mining. But in New Mexico as well, we have strong relationships with the state regulators, but there hasn't been so far a lot of influence from the federal on the state. The state continues to carry out its processes, as the entity that it is. So, looking forward to seeing how that plays out for sure. How the federal push kind of influences permitting and processes at the state level in every state, not just New Mexico, but having really strong federal level support for uranium miners is just an incredible step forward from where we were 5 or 6 years ago. So we'll take it, and I do feel like there's kind of a very positive vibe, let's say, around uranium and development. There's huge potential to bring money into states to build these operations, and some of the historic concerns about mining in general, I think aren't won't be as big of a factor in modern execution. I think that it's hugely important that we do everything exactly right from an environmental and safety perspective, and
Absolutely.
clean up after ourselves. And I think that's the future. We just need some strong examples of execution on that side to convince everybody.
Yeah, definitely. No, that's how I see it also. So I would say there's a perfect setup, perfect foundation for success in the next years. As I see, thank you very much for your time for the interview. And yeah, I would say hit us with good results and lots of them. And please show us a good PEA because I'm a shareholder too.
Thank you very much. We'll do our best for sure.
Perfect. Thank you very much, Colin.
Thank
Yeah,
you.
listen, thank you very much. Ladies and gentlemen, it was Colin Healey, the CEO of Premier American Uranium. And you heard it. This is the top explorer in the uranium space in the United States, just merged with nuclear fuels. And I think that looks really great. A great idea to really do that because to put those two fantastic projects together in Wyoming, that helps a lot of synergies. And also from $2 to $14 million in the treasury, that helps also a lot in those times. And uranium is hot. Uranium has the uranium train has left the station. Make sure you are part of it. So have a look on Premier American Uranium. Thanks for watching us, and bye bye from Switzerland.